Good morning and welcome to today's more important analysis videos on Thursday, 5th of July with me, Richard Perry, market analyst at Hantec Markets. We've got a little bit of a sort of dichotomy in the markets at the moment. It's a sort of mixed outlook coming into the business end of the week, and the business end of the week is the US data points for non-farm payrolls on Friday, and also the ISM non-manufacturing data today. And interestingly, also, we've got this implementation of the US tariffs on China that are set to be announced tomorrow, and then subsequently how China reacts to that, and then subsequently how the US reacts to China's reaction. So a lot of uncertainties still surrounding that, and generally speaking, the markets are lacking direction. But there is one aspect to the market that has got direction, and that's the euro that's picked up. We've seen that a couple of factors here. The euro has picked up on suggestions from some of the ECB members that expectations of rate hikes next year are sort of a little bit, or they're a little bit worried about them being pushed back too far. So subsequently, the euro has rallied a bit. You've got comments from Peter Pryor, who's the ECB chief economist. He's talking at the moment, and he's suggesting that inflation fears have basically dried up, or certainly deflationary fears have dried up, and inflation is beginning to generate. And again, that's sort of helping to support the euro today. Not only that, you've got the suggestion the DAX is outperforming quite strongly on reports that US officials are meeting with car manufacturers or car producing bosses, and to sort of, I suppose, talk about how those tariffs are going to impact. So subsequently, we've seen a big outperformance of the German car manufacturers today, BMW, Daimler, and what was the other one? Volkswagen, all looking pretty strong today. So it's looking good in Germany for the DAX. As the DAX sort of 12,440, I will add, is resistance that is broken out initially, but just come back a little bit. But watch out for that later today. In terms of the dollar, no real moves. A little bit of a slip back initially has been supported to an extent today. We've had a tick higher on yields, but that tick higher on treasury yields has been mirrored across. The German yields ticking higher, and also UK yields as well. So there's no real sort of move that has been driven through the forex markets from that. But you do see that the dollar is now breaking that uptrend. Interestingly, I talked about that yesterday in my traders webinar. So data points today are US based. US was on public holiday yesterday, and they've subsequently sort of delayed their ISM non-manufacturing PMI, and also the weekly crude stocks, weekly inventories, and ADP as well. ADP 190 today, said no real sort of surprises there really for non-farm payrolls on Friday. ISM non-manufacturing slightly lower is expected there, but still pretty strong at 58.3, isn't it? Weekly crude stocks all in drawdown. So that would be, again, supportive for oil if it were to be seen. Now, also we've got the Fed meeting minutes tonight. Now, the meeting minutes are likely to be pretty much confirming the hawkish view that the Fed gave out in its FOMC statement and the rate hike a couple of weeks ago. The expectation, I suppose, could be that if it doesn't sort of go strongly hawkish, then maybe you could see a bit of a dollar correction, bit of an underwhelming FOMC minutes. But I think the likelihood is it will be pretty solidly positive, given the outlook that Jerome Powell gave in his press conference at the FOMC announcement recently. So my chart of the day is the Euro Aussie. Now, we've seen Euro, which has been corrective against several of the forex majors in the last couple of days, but just picking up again. I mean, let's, for example, show you the Euro Canadian, which has been at the equivalent uptrend channel has been broken, but on Euro Aussie, the uptrend channel held pretty nicely and actually tested the low of the channel to the pip, 57.25, and bounced. And not only that, we're bouncing back above 57.70, which, if I zoom out, you can tell is a key long-term level that has been a pivotal level. 57.70 been supportive, and then a basis of resistance, and then breaking back above it is a strong move. So it sort of reopens the trend channel higher. 58.87 is that rally higher from Tuesday. That instantly now becomes an issue of whether that's going to be tested. Now, early on this morning, or certainly yesterday when I was looking at this chart, the market was beginning to sort of lose a bit of impetus in these momentum indicators, but as long as the stochastics hold up above 80 and do not cross back lower, and as long as the MACD lines don't cross back lower, I think RSI above 60 is still fairly positive, isn't it? And although the initial impetus of the run higher has been sort of questioned, I still think that momentum is pretty strong. So I think 58.87 could well come under pressure and continue this trend channel higher. You've then got 58.87 is actually a resistance from there as well, but then 59.60 comes in as your sort of earlier in May high, and then you start to come back towards all these sort of March-April highs. So you've got a continued reaction higher, and back above 57.70 is the positive move for this chart, as that is, as I said, that longer term pivot. So I wish you good luck in your trading today, and I will speak to you later.